Welcome to another day in the Matrix. This is Red Pill Podcast 124. This will be the stock market blue moon special. I hope you guys are all doing amazing this weekend. Today we'll be reviewing all the blue moons for the major stock market indices, specifically the Dow Jones and NASDAQ since 1999, as promised in last week's podcast. This will be right around the peak of the dot-com bubble, which was during a Shemitah year, the classic 7-year cycle we talk about often, where the market tends to peak into a bull run all-time high, followed by a dramatic downturn, as well as most of the historic market crashes. And we went through one of those just last year. So today's podcast will be reviewing over 20 years of data, so strap yourselves in because like last week's podcast, this is going to be a hell of a ride. But before we get into things, make sure to get comfortable, get relaxed, grab yourself a cup of coffee or tea if it's the morning, or a glass of wine or beer or any beverage of your choice. Again, this is Red Pill Podcast 124. Appreciate and I am grateful for every single one of you. And if you are new here and you have yet to get access to our Discord server, just go ahead and send me a direct message on Patreon with your Discord username and the last 4 numbers after that username, and I will reply back to you with a Patreon message giving you Discord server access. As well as we're doing amazing with the altcoin voting system, but just to remind people, make sure that when you put in a submission that we haven't covered that coin in at least 3 months. We've been having some similar submissions like HBAR over and over again, and really nothing has changed, and the last analysis that I released on that is pretty much still applicable to this day. So just be reminded, it's good to give at least 3 months of new data to form in the charts before going back over the coin. But in today's podcast regarding the altcoins, after Bitcoin, ETH, and XRP, we'll be getting into Shiba Inu, Casper, Vulcan, Forged, and ending things off with Yearn Finance. And as I said earlier, we will be doing a full analysis on all the blue moons going back to 1999 for the Dow Jones and the NASDAQ. So, as always, to get the most out of today's podcast, make sure to take notes during this one and invest your attention into the details, because that's the data that has the most utility for determining what will come next in today's market. And this way you could utilize it as you become more self-reliant. And as you can imagine, this will be a very special podcast and can almost be considered a part 2 to last week's crypto blue moon special, where I went over all the blue moons since the genesis of Bitcoin and also reviewed a very thorough analysis of specifically the month of August for Bitcoin with an almost surgical level of precision. This helped us identify a key pattern between August 14th through 17th. And reminder, August 14th is actually tomorrow. Right there, 33 days before Rosh Hashanah on Saturn Day, September 16th. A very, very important day because this will be the end of the Jubilee. But tomorrow being the start of a new trading week, so everything will be open. We have the indices opening up, precious metals, Forex, obviously crypto never stops, and we'll have the Chicago Mercantile Exchange open regarding Bitcoin and Ethereum. So we have a really, really big week that we're moving into because it's going to be the 33rd week of this year, as you could see right here, starting on August 14th. So specifically for Bitcoin, August 14th being tomorrow and 15th have been a standout for over a decade of chart history, while August 18th and 19th have some pretty nasty flash crashes whenever we did not have a flash crash at the beginning of August. That's key. That's a key nuance. So since we have made it through that first week of August without a flash crash, we have to pay attention to August 18th and 19th as a potential date range to have some notable volatility. Again, I am not calling for a flash crash on these dates. I just presented to everyone last week the truth in these charts, and it's undeniable that the month of August is one of the most repeatable iterations of a pretty devastating liquidation event that seems to come out of nowhere. It blindsides traders, it's a shakeout, and it has happened in the month of August so many times since the genesis of Bitcoin that it cannot be ignored. And we also identified if we get lows planted by August 15th instead of a bullish peak, we tend to see a pattern of a slight uptrend into the very beginning of September, which for us is right around the blue moon. So this kind of makes me feel that getting through the 33rd week of this year is so telling in what's to come for the next big pivot for crypto as a whole, because of how it affects Bitcoin, which then affects Ethereum and everything else. So this is really a crucial time, and we're moving right into it. And that's why I wanted to get the Bitcoin Blue Moon data to you guys first in last week's podcast, give you a full week to kind of soak that all in and absorb it. Now this week we'll really be sealing the deal on the effect of the blue moon in over 20 years of chart history for the stock market. So if you haven't watched the last Red Pill podcast, definitely check that out because it covers everything in depth. And what all of these dates that I've been talking about have in common is that they fall in the 33rd week of the year. We just spoke about that a moment ago. That number 33 is the master number of transmutation. And the most important connection to all of this will be this upcoming August 16th. I did speak about this in the last Red Pill podcast, but we're just going to have this one date to talk about today really quickly because it is the most significant connection. So August 16th is 33 days before the absolute end of the Jubilee. This Monday, September 18th, is effectively the new Hebrew year. And this is the date leaving 137 days in the year. 137 is your 33rd prime number, as you could see right there. And August 16th also lands in the 33rd week of the year. So make sure to keep this date in mind. It's just coincidentally about 3 days away from today's podcast. So now before we get into the stock market blue moon analysis, let's quickly recap those 3 scenarios that I shared last month based off of the Dow Jones chart. And let's just see what scenario is currently playing out. I believe this is an important place to start actually before we dive any deeper. So I'm going to be going over here to the Dow Jones Industrial, and I'm going to keep all of this data on the charts, and we're just going to quickly again recap these 3 scenarios one by one and then kind of see where we're at today. I think this is important because this is what's pretty telling in how perhaps the rest of this month can shake out leading into the next full moon, the blue moon right there at the end of August. So scenario number 1 was a typical bull trap, which is pretty much what we're doing right now. This would also be called an automatic rally, which this is a very extended version of an automatic rally. Typically, they would only come up somewhere into this 702 territory and at best the top of the golden pocket, and in very extreme cases all the way up into the 888 fib, which is a very nasty bull trap because it extends you through a technical level on a macro fib pull that would make you feel as if we're going to continue into price discovery. What I mean by this is it's a typical, Forex or just traditional analysis point to look at the 786, and closing macro candles above the 786 has usually been a continuation signal. But when you're aware of how these bull traps work and how there's different types of bull traps, this is where it could get very elusive and where it tends to trap people in probably one of the worst places, which is the top. And we all know retail tends to get trapped at the extremes of the data. Either they get liquidated on these flash crashes, they panic sell. I believe the term would be weak hands. It's not a term I use because I don't look at it that way, but it is what it is. And then you have this whole effect of just the fear, right? People tend to sell the fear, and then that's what they should actually be doing the opposite of, right? They're always doing the opposite of what the most sophisticated traders are doing, which is buying the fear or buying the boredom. So right now we're in this place where it's seemingly very bullish. A lot of the technicals are very bullish, and that's probably making people in hedge funds and a lot of the big money players that aren't necessarily in the elite are thinking, well, sky's the limit here on this breakout. And that's why I wanted to share these 3 scenarios with you all here in advance. And by the way, you guys know that even at the end of 2022, near the end of the Shemitah, I was calling for an automatic rally on this market to be the next move we get, and that's completed. So in hindsight, looking back at a 29,000 Dow Jones and talking about a potential 702 of the 34,000 point Dow Jones, that sounded like heresy to people at the time. It sounded insane, but actually we directly went straight into it right after this correction, which so happened to be right there at the end of the Shemitah. You can see how beautiful this is. This red box is from Rosh Hashanah to Rosh Hashanah, and look at where the very bottom of the market thus far has been on the major indices, right there at the end of the Shemitah. You can't make this stuff up. So what followed is what we projected, and now we're trying to see when will it stop? When will this automatic rally come to a close? So scenario number 2 would be a double top, which we haven't quite made it up there yet. Then scenario number 3 would be something I'm calling a rare higher high bull trap. Now, we know that this is a possibility because if I go to this chart right here, we actually saw Bitcoin do this. If I hide everything, because some of you might be newer here and you didn't watch those episodes where I talked about the 3 scenarios to look out for on the indices, and that's totally fine. We're just doing a quick recap of that here. But a good scenario 3 example would be right here in Bitcoin. You have an all-time high, you have large correction, you have a rally into a slightly higher high, but it ends up being a bull trap because it led you into what we call a bear market. Now, this is very elusive, and that's why I call it a rare higher high bull trap. It is still a bull trap, even though it's technically higher highs. Of course, you have bearish divergences playing out. You have a bunch of technicals. We don't need to get into that today, but I just wanted to show you a fractal example of something specifically to what we pay attention to the most, which is the crypto market. Now, Ethereum did the same exact thing as this. Barely new all-time high right into Q4 of 2021, followed by a correction. A deeper correction, which was into the lunar eclipse of 2022. You guys remember that time very vividly because we had Terra Luna pretty much collapse, the depegging of their stablecoin, etc. Everything that went down with Do Kwon. And then the next bigger correction right there into November, lunar eclipse with the FTX event and everything that happened with Sam Bankman-Fried. So here's your example. I'm not saying this number 3 will happen, but it's in the cards because technically we're still making a decision where to go next. So I'm going to break this down a little bit deeper, but play by play, it seems thus far we are still in scenario number 1, which is just your typical bull trap, with the Dow Jones topping out right around the middle point between the 888 fib and the golden pocket, top of the golden pocket, the 786. And it's been slowing down here whilst holding the 786 as a support. And you could pretty much see for the last week, we did back test the top of the golden pocket a couple times. This is going to be a clean psychological level of 35,000 points on the nose. You could also see that going back to here. This is a place where we have a ton of trading volume now. So we magnetized up to a level and we've seemingly stalled out. So this is still a very bullish setup, and it still leaves an opportunity for scenario number 2, a double top, and scenario number 3 to take place. Although the Dow does seem to be put into these 3-week to 1-month mini consolidation cycles before making a directional decision. And you could see it right here. This is about 21 days to a full 4 weeks. Right here, it's the same thing. Right here, it's the same thing, as well as over here and back here. We tend to have these like little crown top moments. And then lately, the decision has been mini correction. Pretty much after all of them, we have a mini correction. Now, these corrections have seemingly started a reversal after this moment right here. And we knew that because we had this down sloping resistance line, which broke here on June 7th and then got back tested to confirm a prior resistance as a new support. That was extremely bullish. And that's effectively what led us into a new continuation of the overall trend, because you have a low, higher low, higher low, higher low. And right here was the break of that lower high. This sideways range was effectively 200 and something days. That's a very long time to be dealing with that general level of resistance. And once breaking through it, which was quite recent, we've seemingly stalled out effectively right there on the last FOMC meeting. So we don't have another FOMC meeting until September 19th through 20th. You could see that right here. Powell will speak on the 20th. That is just 3 days after the end of Jubilee. Okay, take note of that. So that is a very important data point to take note of. And that's just about a month and a week from now. So we basically know that so much could happen between now and then. You know, that's kind of the vibe. Once you get into around Rosh Hashanah time, that's where we tend to see things get a little weird, you know, but we're prepared because we know about this. 99% of investors have no idea about a lot of these things that we talk about here. So consider yourself special. You know, you really have an edge on the market. And one moment, family, I'm just going to take a quick sip of water. Okay, so just to wrap up some of these thoughts before we get into the blue moon analysis, if you look at the last FOMC meeting, that was right there on July 26th. And it's pretty obvious that after the last FOMC meeting, effectively the market has stalled out. So that uptrend that we've been experiencing, it started to slow down a little bit, which is actually pretty healthy since the NASDAQ, for example, was going parabolic pretty much directly into that FOMC meeting. So now things are getting a little bit weird on the NASDAQ from a technical perspective. Hitting into the 888 is way overextended. Having this correction breaking slightly below the 786 is expected as well. And this to me shows that this might be the top point of the full automatic rally. Now what's a little messed up about this is you can't really start calling it an automatic rally in the completion phase until we break below this level right here, which was just your higher peak. So you have high, lower high, lower high. And then right here, when you broke that was when you confirmed uptrend. And you could see from that moment we broke this prior peak, we pretty much went up in a straight line for the next 2 months. Okay, so until we start to come back there and play around with that line, that won't look like the end of an automatic rally until that moment. So effectively like this. Okay, and then usually you make it all the way down to back on the 236. That's what really automatic rallies look like. After this deeper correction, you have the next phase of a bull run. So if you were to break down stages of a bull run recovery, this is phase 1 of a bull run. Now phase 2 is a mini correction, and then you enter phase 3, which is price discovery, breaking above highs. This is what we call an SOS in Wyckoff method. An SOS, we call it a sign of strength because we've broken above the automatic rally and we're confirming that we're ready to actually keep this show moving. But for right now, this is to trap bears, this whole move starting from here. It's to make people get very, very bearish all around here and then just keep moving it up and up and up, an arduous uptrend to get everyone super bullish again. And then they reverse it at the time where everyone's become bullish, right? They have this beautiful way of playing with sentiment. I believe a lot of you are already aware of this. And getting back to this whole idea, we have a lot of time between now and the next FOMC meeting. So It looks like the NASDAQ, as it was the one that showed us signs of continuation into the finality of the automatic rally, it looks like now it's showing us signs that it is a true, in fact, automatic rally, and it has effectively topped out, and it probably should not go much higher. We're still waiting to see that on the Dow, but so far S&P pretty much mimicking exactly what was going on in this NASDAQ chart. You could see the shape. Incredible that it even made this whole run. Now, let's get into the blue moon analysis for the stock market to see how this could potentially influence the crypto market during these last weeks of Jubilee. I'm going to be going over here into this tab. You could see things are looking a little different, a little more clean. Going to spend the next couple moments going through every blue moon backwards to 1999, right around the dot-com bubble. We have this recent iteration where we had a little bit of a correction on the first full moon, and now we've been stalling out sideways, moving into the next blue moon. Now, the last iteration of this was back in 2020. Right there in October. That's your first full moon of the month. We rallied up into probably the new moon, which you guys expect. By the way, the new moon is just a couple days away. It's on the 17th of August, I'm pretty sure. Let me double check. Yep, it's on the 16th. So just 3 days away, right there at that critical date that I shared with you all earlier. Okay, so we moved up after the first full moon and then dump into the blue moon. So if you're noticing these little boxes, they're all marked because I'm either writing HL for higher low or LL for lower low between the first full moon of the month and the blue moon. So now we're going to go backwards. We had this moment right here, which you will see again, a similar thing where we have two back-to-back blue moons. Crazy time period, because if you zoom out, you see we went into a bull run right here, and that was the same case for Bitcoin. Bitcoin went into a bull run all the way into right there about Q4 of 2017, topped out mid-December 2017, and then the alt season continued slightly into the beginning of January, followed by a huge correction, and it's really interesting how that was a blue moon. So think about that, family. When we go back to the bull run of 2017 into Q1 2018 right here. Let me turn off all of this stuff for you guys. This right there. That was into a blue moon. Not only just a blue moon, back-to-back blue moons. That was this moment right here. Okay, so nasty correction on the blue moon. And then here in this iteration, we had kind of just chop, but generally like a double bottom effect before a slight recovery into a new high. This is insane how it did this. Let me see the amount of time in between. Oh my God, almost a full year. Wow, this looks very similar kind of setup too. Like kind of what we're doing now, how we recovered, overextended recovery. Let me see the total correction too. 12%. Okay, it's been a little nastier in the last 2022 correction. But needless to say, you kind of get the vibe here. A higher low followed by another lower low. And then we have the blue moon of July 2015. Pretty much basic, holding before something I would point out, which is this devastating correction. You know, this is a pretty nasty correction right there into August. Would you look at that? Okay, so this is a data point for us to consider. Now, I wrote these all out, like I charted it all, but I wanted to free flow this analysis for you guys. So it kind of gives you like a, you know, you see the method to my madness. This is how I do a lot of things. I go off of intuition because I already know the TA. I already know how to do all the technical stuff and I have the foundation. But the most important thing in all of this is your stomach. You know, take the words of wisdom from the great Peter Lynch. When he talks about, you know, who becomes the best investor is the one who has the stomach, you know? It's the ones who can deal with all the fear and also prevent themselves from FOMOing. So right now we're in like an intuitive place because we're doing a very, very esoteric analysis. This is very experimental analysis when we're looking at blue moons. You know, very few people are even going to consider this as a factor. But this is pretty interesting setup, how we had a little bit of chop. Higher low, technically, because there's your full moon, blue moon. There's your first. Pretty much in line, though. I mean, that's splitting hairs. I would call that neutral, actually. And then just boom, big correction And from the full moon down to the very peak, that was a 13% correction. So let me load up the Dow on this chart just for fun and see what that would be like if we just had a full correction off of our current lows of about 13% and where that would take us. So I'm going to pull it right there off of this structural low. Oh yeah, geez. Now I know that didn't look like a lot on the last chart, but fuck, this would bring you all the way down to the 236, guys. Like on a 13% correction from those full moon lows. Think about that. What did I just teach you before about the end of an automatic rally and when you would start confirming it? It would be pretty much breaking back below your prior resistance, which would be right here on the Dow Jones chart of the 702 fib. When you start breaking below that, that would be when you think, okay, we're probably going to continue now at least to the 382 and usually to the 236. Now things can get even more devastating where you have a double bottom. So you start to reverse these scenarios essentially. Instead of a double top, you would think double bottom. And then even further than that, you would have, you can't call it a dead cat bounce because typically a dead cat bounce is only coming up into the 0.5 fib followed by a rejection, which leads to a lower low. But you would just have, you know, what we've been actually waiting for, which is a much deeper correction and a much more sensible correction. Because if you were to study the economy as a whole right now, there's absolutely no reason the stock market should be up this high, given the conditions of what's happening with the world, with jobs, with hyperinflation, talk of central bank digital currencies. I mean, you name it. Like, people are in debt to their eyelids right now, and the stock market is reapproaching prior all-time highs. I mean, this is a circus, right? And you really think about what's happening. This market should not be up right now. Now, once it comes back to reality, which remember, we're in a jubilee year. So that's why these things are this is a rare 50-year cycle. That's why it could get like this. But that's about to come to an end soon, okay? We only have a couple more weeks of Jubilee, and I think we're gonna, you know, La La Land has been fun and all, but we got to come back to reality. So I would really love to see a deeper correction for this. It should happen. I mean, historically, this correction we had from our current all-time high down to here is not even that big of a deal, you know? A 22% correction. But when you're looking at like the .com bubble crash, oof, you know, that got nasty. And I mean, just look at this. The financial crisis of 2008, fucking 50% correction, okay? So if we were to pull off something even similar, my goodness, we'd be reapproaching the C19 lows. This is the C19 crash, okay? So we know that the Dow could correct quite a bit. We only need one really big chaotic thing to unfold. It could be anything at this point. It could be the introduction of CBDCs, particularly by the Eurozone, which we know Christine Lagarde has talked about for the month of October, which we'll be getting to in the future. But for now, I don't want to jump around too much. I want to stay on track here. But I just wanted to show you how in this iteration of the blue moon, it followed immediately by a 13% correction. And if that was the case this time around, it would be bringing us straight to that 236. And then anyone who was hanging out up here that was greedy and they were not taking advantage of this over-exaggerated, overbought market would be really biting, you know, they'd be really, really pissed. But you guys know about automatic rallies. You know how they work. They're initially a bear trap, and then they try to trap bulls at the top, getting you both ways. That's how they do it. So let's back up, and we have a blue moon over here, which a higher low situation. Woo, this is really interesting. Again, in the month of August. Okay, so we know that the blue moon this month is happening in August as well. Now look at that. We moved up into the middle of the month, probably around the new moon, correction into the blue moon, but then actually moved up again, into September. And effectively, we did break into a new all-time high. I'll take that back. Let's consider it based off these cycles. We moved into a new microcycle high and then went into a correction into the month of November. Really interesting fractal. Keep that in mind. Only because it happened in August. Whenever we have August data and we know we're in the month of August, that's very helpful. Okay, blue moon here. Wow, similar setup. We have full moon, higher low on the blue moon, and moving up effectively out of it. A little bit of a deeper correction to follow. Over here, we have 2007 in the month of June. Oh my, the same thing, pretty much, just with a lower low, but after the blue moon, we moved up a little bit later. Look at this. Let me go from the blue moon and see when did we move to the top. 18 days, effectively before a correction. Jeez, okay. What's going on here? Okay, fuck. Yo, you see how fun this is? Like when you really just, pattern recognition is everything, family. The more and more you look at charts and you practice something every time you look at them, like you're not just opening up these charts to stare at it go up and down. You're trying to find patterns. So you see my pattern recognition, how I was able to pull that off, how I noticed after 3 iterations of how we have the blue moon and then we move up a little bit slightly after it, top out, correct. Move up slightly after it, top out, correct. Move up slightly after it, top out, correct. This is over and over again. This invalidated. This technically invalidated. Really cool though to find those 3 back to back to back. Okay. Got through this one. Now this is happening in a downtrend, so that's really where we start to kind of disregard some of these iterations, because lately we've been in an uptrend. If you take today's market, these have low, low, lower, low, lower, low, low, higher, low, higher, low, higher, low. So this is a downtrend. It was broken effectively right there, and then we moved up. Okay, very interesting. Again, after here, kind of got a little bit of bullish energy before a deeper correction happening in Q4 after a pretty devastating ooh, look at that. That's in the month of August. You see this right after the end of August, just boom, really super sharp correction. 22%. That would be bloody for that to happen to us right now. Keep that in mind. These August months have a pattern. Okay, so this is just like 2018. So here we are at 1999. Here is your .com bubble top right there. This is looking at the Dow, by the way. In the NASDAQ, it was mostly tech stocks, so you're going to see a little bit different. But these are the back-to-back blue moons in the month of January and March, just like you got over here in 2018. Back-to-back blue moons in January and March. Pretty crazy, right? This is a little bit sloppier, just an uptrend. We were in the midst of an uptrend then. Can't really use this data too much. But I do like this. Okay, so you see top, another top, holding an uptrend, another top into the month of August. Then look at the deeper correction into October. So keep that in mind. It's still a pattern, regardless of the blue moon or not, this month of August. Okay, so now I'm going to go to the NASDAQ. We're going to run through this much quicker because we already get the taste of what's happening. Okay, so we have here blue moon. Pretty similar scenario, going up a little bit after it. That seems to be a trend. We get our blue moons in general. We tend to go up slightly either around them or after them. Choppy though. I wouldn't even really pay too much attention to this. Now here was bloody. Big correction. Nice bounce though. Okay, now these were getting into the 3 in a row blue moons, followed by about 20 days of uptrend, 18 to 20 days into September. Boom, correction. Right here, blue moon, stayed up, correction. Right here, nice rally, correction. So it's like the blue moon triggered a correction. And it seems like in 2018, leading into those blue moons triggered the end of a bull run. Boom, big sell-off into August. Take note of the month of August. Here, slightly up, staying slightly up, but then re-entering a downtrend. Pretty rough. These do look like pivot points to me, man. Every time we get these blue moons, that looks like a pivot point. Look, deep correction, peak top, which then confirmed that this is not a continuation or reversal. It's continuation down. Holy moly. When you take the full fucking jeez, 83% correction from the peak of the dot-com bubble in March of 2000 to the lows 2002. 900 days later. That's dramatic. There was nothing fun about being in this. But anyone who bought this, I mean, shit, if you bought this consolidation range, that even if you bought right here to today, oh yeah, you're probably happy with 1,000% up. My God. Okay, and then this is your blue moons, back-to-back blue moons, similar to 2018, but back in 1999, which then kind of, was more just propelling into the finality of what was the dot-com bubble. So really interesting setup. And now I wouldn't be surprised if this was what we were moving to next year. If this is kind of our setup, choppy, maybe we do get a nice deep correction, but overall hold structure and hold an overall bull trend, meaning whatever low we get in the next correction, it is a higher low than the C19 crash, and then just continue on up. Probably a really nice rebound off of any correction as well. Whatever corrections we get, I think it's going to be more like this, just boom, V shape, and then we'll be fine into the year of 2024. I'm bullish on 2024 no matter what. Okay, so now let's just take this, bring it into a bi-weekly, kind of get a big picture here. And I took a note, all right, on the NASDAQ. We have 8 higher lows on blue moons, 3 lower lows on blue moons, meaning that 73% of the time, the blue moon is a higher low, meaning the full moon before the second full moon of the same month is lower, and the blue moon is higher, all right? Now, on the Dow, we're going to have the same exact thing. Obviously, they're indices, so they're pretty close. We have 7 iterations of higher lows, 4 iterations of lower lows. About 64% of the time, the blue moon is a higher low. So that's it. It seems this pattern can help us alongside the data we have of the past 50 years of data, including the stock market performance of pre-election years. So I went over this in depth in the last decode I released. And if you look at this navy blue bar, you can see the pre-election years. And here we are in the month of August, and we can see that we're typically neutral over the past 50 years when it comes to the month of August. But for whatever reason, on pre-election years, we're almost up a full percent regarding the S&P. And this is really good data because it's been up to basically March of 2023. Since 1950. It's a great amount of data. Now, this is great because this shows us that we tend to end the month of August slightly green and across the board closing in the red for the month of September. And it's funny enough, this data shows a slightly neutral to even positive month of October. Although we have generally a positive Q4, coincidentally, it's the time frame with the most historic market crashes. So again, we need to be cautious this September and October, especially with us being halfway through August now and approaching these months very soon. And I'll personally be treating any correction in September and October as a buying opportunity. And most of you are well aware. I've been saying that for pretty much over a full year now. That any corrections 1 year after a Shemitah are a gift. And here we are. We're just months away from that moment. And we know these markets can correct pretty quickly. We saw before a 20% correction in 25 days. If that was to happen in the charts that we're looking at today, to essentially have a 20% correction in 1 month, that would be like that would be putting us on a lower low and a confirmation that we're still in a downtrend. If this happens to be our lower high, we won't know until we actually break a lower candle into 29,000 on the Dow, for instance. So that would be very dramatic if we were to have a 20% correction in a single month. I mean, with today's market cap and with today's on and off ramps and how easy it is to sell and buy, that's not out of the cards. I'm not saying it will happen, but we're kind of in that moment. Okay. So of course, I'll be dollar cost averaging during these times. This is coming back to what I was just saying before about using any corrections at this point as a buying opportunity. I will be DCAing during those times. I always break my buy-ins up the same way I stack my take profit limit orders. Again, I teach all of this in my crypto mastermind course, which is included with the exit strategy blueprint within that course, and that is the best value for anyone here as a Patreon supporter, since you get the best discount available in that course, and that is a one-time payment for lifetime access, so you can go at your own pace. No need to rush through anything. That course is packed with value, especially during times like this when those who are aware of what we're aware of, you really have an edge on this market over the average investor. So the things that are being taught in the crypto mastermind and in that exit strategy blueprint that's included are invaluable in these moments. You're really going to be prepared not only emotionally, but from a technical perspective of where you should be buying in and how you should be responding to anything that starts to scare or fluster the average investor. So let's get into the TA in the charts, and we'll be starting with Bitcoin. But just a reminder that whatever lows that we've recently planted on the recent full moon, which was somewhere around this territory right here, we are either going to be more neutral or a slightly higher low into the blue moon of August 30th, August 31st. That's what the data shows. 63 to over 70% of the time, that's how it's happened. And then we also saw in a lot of iterations after the blue moon, about 18 trading days after to 20 days, we have topped out and then sank lower than whatever the first full moon lows were. So it could literally go like this. We could be coming up into here, higher low on the blue moon, and then into Rosh Hashanah like this, just slight, and then boom. This could very much be the case because that seemed to be the pattern that these blue moons were telling us. So just keep that in mind. Let's get over into Bitcoin. All right, very big day today, believe it or not, from a technical perspective, because we have a bi-weekly close. Let me turn off these drawings and just look at a clean chart. So this means 2-week candle is closing today. And not only that, of course, a weekly candle, as well as a 5-day candle and a 3-day candle, all close tonight. So tonight's is a very, very, very important close for Bitcoin and the overall crypto market. And with the Chicago Mercantile Exchange opening up the CME for Bitcoin and ETH right before our weekly close comes in, that could bring in some last minute volatility, especially while we're hovering around this 30,000 area. That seems to be a psychological resistance. And if you look at it with just clean candlesticks as we are here, we can see that used to be a key bounce level for Bitcoin or a support. Now today we're just back testing it in the other direction, kind of confirming it's a resistance. And that's undeniable at this point because we've been trapped here for over 100 days, not able to break above 31,000. Just kind of getting there, smack down, holding this level, trying again, getting smacked down. That used to be the prior support. And once we broke that support on the lunar eclipse of May, it's 2022, that was when we continued on to our selling climax. Now we're here effectively in an automatic rally, and we're in what seems to be the final moments, as we've been saying for a while now. So with this crucial close, it's important that we zoom out a little bit, take things for the more traditional analysis, vision, and perceive it that way without getting too fancy, even though, we tend to be a little more esoteric around here. But that's what you guys want. That's what I want. That's what I seek. If we wanted basic everyday analysis, you would be looking elsewhere, right? We're doing something that's going the next, we're taking it deeper to the next dimension. So what I like here is actually, if you look at these candles, we have about 5 bi-weekly candles or 70 days over 2 months of getting resistance at a point that now we've back tested and we're locally holding as a support. So that looks really nice. From a bi-weekly closure perspective, getting above 30K, I think would be really nice. Let me look at some of the moving averages. All right, so the 55 simple and the 8 simple are squeezing together. as they squeeze and pinch together. This is sort of trapping us at the moment, but we could see that the 8 simple has been a very good support on the biweekly. Brilliant. We can see the 200 exponential and 200 simple are continuing to slope to the upside. Brilliant. And we have our 55 stalling out, flatlining. Getting that to be crossed by the 8 simple would be really incredible. That's a wolf cross, and the wolf cross happening on these higher time frames is a game changer. Now, we've been moving at a pace where these crosses are going to be much more effective for us to determine continuation or corrections. And you can see right there when we got that wolf cross in the opposite direction, well, we went on a pretty nasty downtrend until we were able to get back above the 8 simple moving average. So take note of that for the future, family. When we start to close below the 8, that's a warning sign. You could see right here, C19 crash. We rode the 8 simple on the biweekly all the way up to pretty much the initial all-time high, arguably the all-time high. And then once we broke below it around here, that was pretty much a sign that we're going to start entering a more bearish phase of this market. We did get this double top, but not everything did this. If you look at how many coins went up to a new all-time high after this moment, it was few and far between. A majority of them, this was their top. April, May of 2021. That was what we called alt season, and it was pretty much perpetual downtrend since then. And these crosses are huge. So we're squeezing together, and once we get this 8 to cross that 55, that's going to be a good moment. Pay attention to these 200s on the downside. You can see right here, this is the C19 crash, and we tapped perfectly on the 200 exponential moving average on the biweekly. Now, we don't have a ton of this data. We're very limited because these are 200 moving averages on the 2-week candles. All right. So with this sitting right about 19,000, that should hold as a higher low support as it's been since it's back tested on one of the most crucial moments in all of our lives, which was a global pandemic. Everything shut down in the world from this. The Federal Reserve responded by printing the most money historically ever in a single year, comparatively to the entire existence of the Federal Reserve System for over 100 years. They printed that much money in a single year, right? Even then, we couldn't break lower than this test. So we held a higher low structure, and we have this data point. Over here, got a little squirrely, but once we got back above the 8, we actually looked at that as a launch point. So it's pretty cool to see. And just keep that cross in mind for the future. Let me turn this off, speed through some of this real quick. Now, this is a very good sign, okay? We have the 13 exponential crossing above the 34. The last time this happened was back here, and this was a pretty nice continuation. When they crossed to the downside, where this red moving average goes below the 13, which happened effectively right there, you can see this cross. That would have been a GTFO signal, because you can see we held 160 days of support. Once this started to show a downslope across, that would have been a good sign that we're heading one leg lower. Let's look over here, and you can see sort of the same thing. You see when this crossed, we tried to hold on this support, which was back tested over here. But once we got that cross, boom, big red candle and more downside. Now it's happening in the opposite direction. That's very bullish. And then look at how since the beginning of this year, we've been holding the 13 EMA. We have yet to close a candle below the 13 EMA. Right now it's sitting at 27,000. That's very, very good. Keep that in mind. If we were to start closing below the 13 EMA, that would definitely be a signal for me for a deeper correction. But until then, it's not in the cards. Let's look at the weekly now. Weekly is looking amazing. Absolutely. We have all of these EMAs in bullish posture. 13 above the 21, above the 34, all spread out pretty nicely. So that means the cross initiated in the time that we're in right now has shown that Bitcoin's been strong. There's no weakness. Now, this is a little bit of weakness closing below the 8, but until we really start closing below the 21 exponential on the weekly, I'm not complaining. And we have the 55 sloping to the upside, which I know I brought up many times, but I like that. All of these key moving averages are really showing that 25K is going to be a really important level for Bitcoin. Very, very important, and potentially could be a strong hold point. Now, because we have a 5-day close coming in today, this is also crucial. Now, this is really nice to see. You see this red moving average, the 34 EMA, has effectively crossed above the 200 exponential. The last time it was in that posture, geez, it's been a while. Wow. I mean, pretty much back here was the cross of the 34 above the 200, and we went on to a spike, and we held that all the way until this new so-called bear market. You could see the cross coming in right there on the downside. So these are all looking good. Now, what I find really interesting is this 200 simple above us. This might be the first iteration of bull run with that 200 simple above us. We have a moment back there. We have this moment right there. Family, I have a feeling that once we get above these 200s, this 200 simple, every single time we've went into an uptrend, like confirmed an uptrend, it did not make a lower low, which means that if we get above this 200 simple, that 15K is our bottom for sure. I mean, this is data that's been going back for a while now. Keep that in mind. But we're not there yet. So chopping sideways is the name of the game until we get there. And we need a 5-day close above 31,000 to really see any signals for more up. We're at a pivot point right now. It's pretty obvious. We have the 3-day. 3-day, everything is coiling together now. Bitcoin needs to make a move. I'm assuming the Bollinger Bands are also squeezed. Yep. Oh yeah. Okay, so now I'm going to just show you kind of the first thing I started to think about. I'm going to go ahead and assume the RSI is flatlining. That sure is. It's kind of hovering in this 50 zone. We can see the squeeze on the Bollinger Bands is getting tighter and tighter as it does. Wow, that might be the most it's squeezed and as long as it's held that posture since we were in the end of last year. It's about as long. Yeah. And when it really starts to squeeze together is when we have exploding price. We just tend to move. So keep that in mind. I would say the next daily close above the topside Bollinger Band should be a confirmation that we're ready to have one last leg up for Bitcoin on the daily. So I'm going to leave the analysis at that. You guys know that the next level down has a lot to do with this horizontal support, which has been somewhere between 26.5, 27, and we're right now we're at 29. So that would kind of be our next level to consider is like 26.5 to 27,000. As for up, it would be 33 to 34. We're just kind of hovering in the middle right now. Let's go to this firmament dome chart. I told you guys that I'll be following up on this week by week, and we're here, man. We got to make a choice soon. So like I said, we could either break out of this dome, which has been a perfect resistance, or we could bash into it and start treating it as, or continuing to treat it as we have, which is as a resistance, and just drop down more and more, effectively wanting to hold this flash crash level of the March 10th Silicon Valley Bank ritual. That's about 21,000, 20,000. But until we drop below this level right here of 25, there's really no point of having that conversation. We are looking beautiful right now. We have a low, higher low, higher low, high, higher high, higher high, higher high, and technically a higher high. This is an uptrend. So until we start to break trend is your friend. Don't get fancy. So really nothing more to say. It's all covered there. Now, ETH, I believe it's going to be the same story. So we're not going to be spending too much time on this. As you're well aware, these Bollinger Bands are super squeezed together right now. Probably the tightest we've seen this band since back here in October of 2022. I mean, even crazier. So we have a declination of volume. We have the RSI kind of just flatlining here at about 45 in that, questionable bullish control zone. And then we have these Bollinger Bands just squeezing super tight with declination of volume. This is ready to move. This has to make a move pretty much based off of these, everything adding up to volatility is missing. So market maker will bring volatility in. That's like my translation of what I'm seeing here. Let's look at the bi-weekly at least turn off these Bollinger Bands, kind of look at what we're getting on just the candlesticks. Okay, we're holding until we start to close a bi-weekly below 1700. Really nothing to cry about. Really just trapped here. Let me look at the, okay, yeah, closing below the 8 simple is not great. Getting back up above the 8 simple, I would like to see if it could get to 1900 tonight. That would be sort of miraculous, but at least a green candle. At least getting to 1880 on the high would be nice. Above 1850, which we're pretty much trading at right now. Okay. And then we have that 55 sitting at about 2271, which was a level that I said to keep an eye on if we do go one leg higher, because we saw that in this iteration of the automatic rally that Ethereum had in the last cycle, where we gravitated to the 55 simple moving average on the bi-weekly plus rejection, harsh rejection too. And now that would kind of be bringing us into a slightly higher high in our bear market structure, and then still overall a lower high in the grand scheme of things. But technically the automatic rally is finished for ETH. If ETH wants to go up one more time, great, but more exaggerated upside is probably unlikely at this time. We're just cutting it too close. 5-day, let me see if, no, really nothing to say here. Let me just look at the daily one last time. All right, we had a wolf cross on the downside. That's not great. We're getting rejected on the 55 simple. That's not great. We've held the 200 simple for a while now, so that would be my next level to look for a correction. If we're going to correct, that's probably more likely to happen on the 200 simple moving average, which, by the way, is kissing the 200 exponential. So they're there together. If they're hanging out together, they're going to be stronger. Just keep that in mind. So that's strengthening that particular support level. Now that is technically in alignment with your horizontal support as well. So we love to consider horizontal levels more than vertical levels. And there we are, 1800 on the nose is probably gonna start to become a reality on a correction. And then we would know that closing below those moving averages would be what sinks us into the next leg lower around this June 16th low. And then really, if you break there, you're invalidating bullish structure in kind of two key conditions, which again, that would be what sends us into these lower levels, which to me is just a buying opportunity. So that's about as much as I could say on ETH this time. All right, now XRP. Oof. We've effectively backtested the 55 simple moving average. How many days off this correction are we? Heading into 30 days, a full month since we've hit this moment, which you all remember. All right, let me look at the bi-weekly. It's hard to do analysis on the bi-weekly on XRP because of how choppy this coin is, but looking at the fact of holding the 55 simple is nice. Obviously, holding that would be fantastic. Breaking below that is really weak. Okay, so we're on the weekly now. We're holding the 8 simple moving average. That's great. All right, this is actually good. You see this red moving average is crossing above these greens. That's the 34 crossing above the 200s. That's really nice to see. And that would put the 8 above the 13, above the 21, above the 34 with the 200s below. That's really good, especially with this wolf cross of the 8 above the 55 and the 55 on the weekly also sloping to the upside. So all of our moving averages are sloping to the upside. They're in bullish posture. We've made a higher high technically. We're holding this level. I mean, this is more bullish than it is bearish, of course. But we all want to see a $1 XRP. You guys know how this goes, though. You need to know the charts. Can't just be hoping for fairy tale land. All right, this isn't good. 5-day close below the 200 simple. It would be nice to get bought back above that, which would be moving up to 64 cents by today. I don't think that's possible, but we'll see. Getting back above that 200 simple would be nice just because that was a prior rejection point, sort of. But the 5 days looking okay. I mean, again, once you start breaking below the 21 EMA on these more macro candles, like the 2-day, 3-day, 5-day, that's when things get a little sloppy. So far we're well above that, and it's at my key level, which I brought up, which is 58 cents. And we've effectively have traded for a couple moments below 60 cents. So we've met that condition at least. Looking at the daily, this could be where we start to bounce, and I would be keen to say that if we could get back above that 21 exponential on the daily, that would be the level. To me, this looks exactly like a micro, like a really short term, like a very short term Wyckoff accumulation pattern. We have a buying climax, selling climax, and what looks like what we want to see for an automatic rally. You see the way that this looks is almost identical to the entirety of the bear market for Bitcoin back in 2018. Look at this. Peak, correction, sideways, and then this like bowl shape, okay? So let me turn this off and you'll see what I'm saying. Peak, all right? Then this correction, sideways, and now we're in this like bowl shape, which could very much be what is in play here. And what happened in this is Bitcoin moved up to the top of the 786. So if I was to pull a fib, you're going to see the top of the 786 is putting you right there into these levels of July 19th and 20th around 85 cent Bitcoin. That could be a gift. And I brought up in the, maybe it was the last or 2 episodes ago, I'm not entirely sure, I brought up a couple scenarios for XRP to consider, fractals to consider. And I would be more conservative right now, just based on the way that XRP tends to perform. You know, an 83, 84 cent Bitcoin on an automatic rally in the micro might be nice, because that could be a lights out, you know, moment after that, which sends you down to back to 54 cents, maybe even 52. You have to be considerate of this because of how close we're getting to the end of Jubilee. You know, it's really a big timing ordeal, sadly. So it would have been nice if XRP could have made this jump up to $1 during this whole fiasco, but clearly it was all driven off of the initial, you know, news of XRP no longer being deemed a security. But since then, it's been weak hands festival. I mean, clearly the XRP army doesn't really give a shit that it's not a security. I mean, you could just see it in the price action. I know when I say things like this, it triggers people, but if you don't have the stomach for this, then you don't have the stomach for being an investor in this market. You know, somebody's going to have to speak the truth here, and the charts tell the story. So if I'm seeing this sort of price action, you know, it's evident to me. Declination of volume since this event, continual lower lows in the structure. Now we're effectively facing thin air all the way to 54 cents. We don't really have a ton of trading range in between here, and every time we tend to break below 60 cents again, we get back into the same horizontal level that we've been dealing with now since forever. You know, seriously, since forever. It's just like it loves this 50 cent level. And until the buyers really step in, the actual retail piles into it like they pretend that they are on Twitter. If they were to do it in real life with real money, you wouldn't have to deal with this anymore. It's clearly not the case. So yeah, anyone who de-risked off of this, you knew that the reason for de-risking off of this is because you're playing the volatility in swings that tend to be repeating over and over again because of the way this coin likes to move. And it moves off of a mythological story, actually, tied to astrology, back to Jupiter and Saturn. And if that's odd to you, then welcome to the WatersAbove Wolfpack. We could go very, very deep into this, even though we try to, you know, have structure as needed. But since we're getting an hour into this episode, we need to now step into our altcoins of the day. Needless to say, with XRP, if we are to have any bullish move up, it's about 70 cents off of this horizontal range that we've been rejected from. That would be a normal level to gravitate back to. And then an micro automatic rally up to 83, 85 cents. Effectively breaking a daily candle above 83 cents would be a continuation sign. Until then, that's not in the conversation. And as for lows, it would be about that 57, 56, 58 cent level, which when we dipped down to that on August 7th, we had a nice buyback. And we've been holding it since. So we'll see how this thing goes into next week. And I'm very bullish on XRP in the long term. So whatever it does into the fall time is buying opportunity to me. And I'm just going to be using what I de-risked to buy back in, effectively collecting more coin. That was always the purpose. Okay, now one thing to clear the air. We're looking at Shiba Inu. I've had some people comment talking about SHIB. Somebody was saying, and I'm not trying to point out any members or anything, so I'll be vague here, but they said, it looks like SHIB is doing the automatic rally thing. No, not even close. Low, high. So I'll just break this down by structure. High, lower high pivot, lower high, still a lower high, still a lower high. And if you were to look at where we're at right now, we're in this sideways for 450 days. It's not an automatic rally until it breaks above and starts to restructure or reverse trend. This is your low, and this is another lower low. It literally had a lower low in June. Bitcoin hasn't had a low since November of 2022. This is not an automatic rally. This is a shit coin. This is horrendous. I mean, even off of the recent lows, this thing is up 60%. Okay, off of Bitcoin's lows, Bitcoin is up 90%. Like, what are we talking about here? All right, like, this is the biggest coin, the highest market cap, with the least volatility. This is a shit coin. All right. Now, this is a fun thing to play with. I get, like, people get excited about these things because, yeah, maybe it rallied up 40% in a couple weeks, but everything does this. It's crypto. This coin does this all the time. Look, this coin went up almost 90% in a calendar month, and then it went even into another downtrend, lower low. Shit coin. This stuff you really want to be careful with, and what you want to be even more careful with is your investment thesis and how, like, alluring these coins are. They have so much kind of retail hopium, and, like, just they distract. This is a shiny object. This is the part of the podcast where I feel like words of wisdom on investment thesis and all of this are crucial. What separates the wolf from the rest is you load up this chart and you go, wow, this looks like dog shit. Literally. It's called Sheeb. So I think these are fun projects that were designed to lure in the masses to be interested in crypto, but they have no use case, no utility, no real purpose. They are, I mean, obviously this is on a 90% correction effectively from current all-time highs. It's had effectively a full 90% correction since all-time highs. It's re-entered its prior horizontal trading range going back to 2021. There's no chart data on this before the C19 moment, which scares me with some of this stuff because we don't know how this coin can do in a moment of real market chaos. So if we were to have some market turmoil, let's just say in October, you best believe this thing is going to shave another zero off. This thing is more than likely to continue down very, very dramatically. And right now it only has this, what is 17 zeros and a 5? I mean, I don't even know how to calculate half this shit because of how unsophisticated it is. You know, all these zeros. What are we doing here? It's not even a penny. So I get it. There's a ton of upside volatility. Some people might be like, what is he saying right now? Why is he being so harsh? But it's just because I know that this was getting some votes and some excitement based off of all the wrong metrics. I want you guys to be excited about things for reasons that are of the sophisticated investor. That's kind of what should be more of a anywho. I want to finish up this episode on high vibes and positivity. I just feel like, you know, these are distractions. And when you look at this chart, you could clearly see that there's two things going on. If people are excited about this, there's two things that poke out to me about wherever those individuals are in the community with their investment thesis. One, you don't know chart analysis. You're lacking the ability to read charts, which is fine. That's an opportunity. That's where you could leverage on the community to learn more. And number two, it's pretty clear that if it's about projects like this, that we're part of a hype cycle and a cultural moment, that, yeah, you know, I mean, again, another shiny object point, distraction. This thing is weak. So until it breaks this level right here, there is no automatic rally. It's coming into the 236 at this time, which is a technical level to get rejected at or to make a decision. And naturally, every time you get above the 236, you gravitate to the 382. Effectively, anything above the 382 is what you would call an automatic rally. So it would have to get above here and still above this point right here to fully confirm that we're on a, you know, uptrend into what we call an automatic rally. That's a break above the 382 into about here. That's an automatic rally. What this thing is doing right now is just, yeah, it's just gravitating up a little after it had an even deeper correction. So yeah, don't get lost in the sauce. Words of wisdom from Chief Wolf. Now we're going over to Casper. Oh yeah, another horrendous chart. Goodness. Oh yeah, I remember this one. All right, so same story. Really hard to do analysis on this stuff. We have effectively, what is this, 800 days of chart history of price discovery to the downside. I'll say that again. We have 800 days of chart history with price discovery to the downside. Yeah. I hope you're understanding where I'm coming from. Now, I don't know what this whole thing was, but at least if we're taking off of about right here, let's kind of see what's going on. Yeah, okay. We're really, it's really difficult, right? When you're working with charts like this, because this is like put it out of its misery already, will you? This is like when the deer gets hit by the car and it's like limping, you know? Like, you can't save this one. So it'll turn into comedy hour if I keep going. All right. So let me just try to get serious. I need a laugh though sometimes. Kind of holding a little bit of a reversal pattern. We'll know if we break here, but we're still at 4 cents. We would need to break 23 cents. So it's hard to even know where to pull your automatic rally from. I would probably be fair to say here is the best we can do. Now I'm going to make sure this is on fib. We're right around the 236. We slightly got above the 382 rejection. I know it's difficult because I don't even have sufficient amount of data to work with. Yeah, I mean, this thing below 10 cents just looks weak to me. And I wouldn't feel safe accumulating this at all. I wouldn't even have 2% of this in my portfolio. So anyone who's aware of what's going on with this project, it's venture capital at best. Anything more, you're really risking a lot. And your horizontal level to keep in mind, if this thing breaks this slight uptrend that it's experiencing right now, would be right around here at 2026 cents. If it breaks there, it'll just continue another leg lower. More price discovery to the downside, which, I mean, by October, November, that could very well be the case. This thing could be heading below a penny for all you know into the end of this year. Yeah, really stay safe out there, fam. Like when it comes to this sort of stuff, you're gambling at best because of the limited chart history and the environment we're in right now of unregulated blockchain. And right before CBDCs get launched, yeah, you got to be careful with this shit. Really not the safest. I'll just save that because I'll probably end up doing some analysis on this in the future. But yeah, downside be about 0.25. Upside, if you could break above 0.6, maybe a jump into about 19, 18 cents at best. But I don't even think that's going to happen this year. This thing would be lucky to make it to 10 cents this year. More than likely down than up, for sure. Now I'm looking at something called, whoa. Oh no. Okay. Again, we're looking at a project called Vulcan Forged. I don't really know what this. Okay. 460 days of this horizontal trading range building a base. Full-blown correction. Trapped here at $3. Like such a random. It like started at 40 and now it's down at 3. Weird. Okay, not really anything to say. The only thing that, and this is like pushing it, is just, yeah, there seems to be some sort of trend that's, God, that's so stupid. It doesn't matter. I could do micro analysis on this, like, okay, I'm just being really, really kind right now, trying to find something to say that isn't just, because I don't want to trash this. Like, you guys know me. I don't want to trash this stuff. That's not what it's about. It's like, what is this, though? Okay, so here's how I would play. Oh, no, this isn't good. Buying climax, selling climax, automatic rally in the interim, getting rejected at the 702, coming back down to 236. That's what we typically look for. We're holding this level at about $3 flat. More than likely, this will head into a spring in the micro. Now, the spring level is bad because it will be below the lower low right now. So I'm going to tell you how we find the spring. I'm going to go off of here to AR. I'm going off of this level right here to the AR top, and that gives us $2 on the nose. Oof. That would be the next level down, more than likely. Delete that. And this gives you kind of an idea. If this was to have another leg up, it would more likely be a dead cat bounce, like a clean dead cat bounce. So let me show you what I mean by this. Apologies, let me get to my drawing tool. So it'd be something like this. We come up to the 0.5 fib, about $4. Let's just say Bitcoin, for whatever miraculous reason, pushes this thing up with it, which it's not even the case, because Bitcoin right now is effectively 90% up from its lows, whilst this thing is up 18%. See, these are all distractions, guys. Like, proof over and over again that during a bear market, you really want to design your portfolio based around at least a majority Bitcoin ETH. And if you don't do that, you're really going to have to learn how to trade. And if you don't want to learn how to trade, then just listen to the first thing I said, and then you're going to be fine. Now, if we get past a Bitcoin halving and you're situated effectively with a profitable income, and you have cash flow, then yeah, play around with the altcoins, because after a Bitcoin halving event, it's like monkeys playing darts. You could pretty much put money in any fucking crypto at that time, and we're more than likely to see profits. But at this stage, it's a different ballgame. Anywho, let me just finish the final thoughts on this idea here. So we have probably more than likely a technical dead cat bounce level where it looks like this. And then it becomes an inverse head and shoulders, which then maybe in the future corrects. But if I was to do this, reset the chart and zoom out, you'll see what this looks like. This looks horrible. If this was to only make it up to the 0.5, again, a technical play, dead cat bounce, moving into $2 into that technical level of the golden ratio, 1618. Yeah. And then you have this idea of your neckline. Still, golden pocket, lower highs. I mean, yuck. Yeah, I wouldn't touch this thing with a 1,000-foot pole. This is really speculative, really not a good chart. And consider that this could effectively break above this current resistance. But you want to look for that 0.5 fib into the golden pocket. Now, if this is going to get bullish, it would have to break $5.30. Until then, it's really nothing to say here. And more than likely heading down to $2 in continuing price discovery to the downside. I'm going to go ahead and delete this. Now, next is Yearn Finance, and we're going to wrap up this podcast. Okay, now we have a little chart history to work with. Okay, all-time high, 95% correction, great. So I would feel confident that this is more than likely the end of the correction. This should be holding at about 4,000. Very weird. I remember this coin when it was doing well. So we're gonna put this here. Just save it for the rest of our charting history. We're gonna pull a fib. Just like so. We're gonna double check to make sure it is in logarithmic correct. And we've been really rejected over and over again around this 382, 236. And you'd want to see break above the 382 for automatic rally. So we might not even have an automatic rally on this project. And another thing that I brought up a couple of times is coins like this could have the next bull run be similar to the XRP or Dash or Stellar Lumen's bull run of 2021, where we only make it up back into this area in the next bull run. Now, that's still a ton of opportunity, because if you think that 600, 700% isn't gains, then, wake up. That's greed. Now, if this thing was to have a deeper correction, we really need to watch out here, because it's thin air. You see this? This is thin air. It could literally drop all the way down to $1,000 again, the same way it came up. So that's why I would not trust this at this time, even though this is effectively your your selling climax, excuse me. This could spring out early. That could be your automatic rally. And this is a lower lows, still downtrend continuation. So a break below 4,077 or a break below this point right here can get really ugly for Yearn Finance. Like we're talking right back to $1,000. Okay, so keep it safe out there, family. I wouldn't feel confident investing in this sort of stuff either. Not a lot of chart history, did not trade before the C19 event. It didn't have that past cycle like things like XLM has, or, you know, a lot of the things that are in our investment thesis, believe it or not. I think we even talked about Chainlink last week. And that's one coin that I would not mind adding to my portfolio as we move into another correction potentially in Q4 of this year. I would love to have a little more Chainlink. I would feel way more confident in that than I would in something like this, just to give you guys an idea where I stand. So all in all, I feel like today's episode was packed, full of information in the beginning, lots of juicy gnosis regarding the blue moon. And we do have these repeating patterns. We're going to be moving into, the new moon next week. And I will also have this new Yellow Bricks Road Decoded coming out this week as well, in the 33rd week of the year. It just so happens how it's all panned out because we have the BRICS Summit on the following week, and I wanted to have that decode as usual out to you guys in advance. Okay, so you could be looking forward to that new Yellow Bricks Road Decoded. Probably be talking a little bit on what I anticipate post decode, also filling you in a little bit more on my theories around BRICS and how this could all shake out as we move into the fall time. So I appreciate every single one of you. I hope you enjoyed this stock market blue moon special. Wishing you all a beautiful rest of your weekend in the Matrix. Much love.